Hey everybody, Marty Missouri. Good morning, December 19th, 2018. Just thought I'd pop in on the video just for a few minutes this morning, share my thoughts, talk about the pending events of the day, potential market impact, and so on. But let's first take a look at the S&P 500 chart you have on your screen there in front of you. This just covers the last 2 days and then the action so far this morning. Notice right here at the top where the market came up to exactly 2,600 on the S&P 500, sold off, traders sold it there, bought it right there at 25.90, sold it again, and then it did nothing but just careen lower the rest of that day, all the way down to 25.30 on the S&P, and we'll talk about the significance of that here in a moment. Then yesterday we got a nice gap at the open, had a really positive day in Dow terms. We were up about 300 points, came up here, tested that level again, then ultimately only to get sold off and test once again this 25.30 level, held again, bounced off of that, sold off at the close, and here we are this morning with a nice looking gain. So 25.30 level. Let me widen your gaze and take a look at the year-to-date chart. This happened to be exactly on an intraday basis where the market bottomed back in February after that dramatic and swift beginning of the year correction. We come all the way back to test this year's intraday low. We have come down below what was the yearly closing low. And as you can see this morning, we're trying to bounce off of that. So the Fed wraps up its 2-day policy meeting today. We will get an announcement at 11 o'clock Pacific time this morning as to what they're thinking. Fed funds futures traders think they're going to raise interest rates, raise the Fed funds rate 0.25%. And I suspect that's pretty much baked into the market. What the market is going to be keying off of is the statement that the Fed makes and the press conference featuring the chairman, Jerome Powell, after the announcement. If he comes across dovish, as we say, meaning if they are backing off of their earlier in the year projections that they're going to raise interest rates as many as 3-4 times next year, if their commentary and what they call their dot plot suggests maybe a hike next year, maybe 2. I don't think the market should get too upset about that. My concern, though, is that maybe the market, in light of this big decline and other global economic concerns, is expecting them to go completely on hold. If they do, I suspect that would be resoundingly bullish. If they say they're data dependent and the dot plot suggests there's still a couple of hikes next year, in my view, that should be bullish as well. But with short sellers so anxious to push this market further down, I just don't know at this point. I can say with confidence that if they essentially hike and hold, I think then the shorts cover. There's an increasing amount of short interest that we're seeing in the market right now. Those would be people who are betting that the market's going to decline, in essence, selling shares. The commitment to buy them back in the future, they anticipate at much lower prices, thus pocketing the difference. So short sellers sell those stocks, and that in and of itself forces stocks lower. No doubt we saw that yesterday. Short sellers came in, or just selling in general came in twice when the Dow was pushing above 300 points. Uncertainty over a lot of things. Right now, the focus is on this Fed meeting today. So we'll see how that goes. There's also the potential that the Fed completely pauses. In fact, at least one ex-Fed governor says they shouldn't hike at all today. That would be interesting. It could be very bullish. It actually could be somewhat negative. If they didn't hike when they've been so advertising that they're going to, it could suggest that they're getting frightened about the state of the economy, and that wouldn't be good either. If they do pause, but if they say, this is just a pause and we're ready to hike the minute we see inflation begin once again to rear its head, or we think the economy is moving at too hot a pace, then we'll certainly raise interest rates. I think it's all about that press conference and how they couch things. So folks, in a nutshell, today is going to be volatile, no doubt about it. Of all the days we've experienced lately, this one has probably the best potential to be volatile to the upside. when you think about the short interest that's out there, that if the market pops, they're going to have to cover to avoid losing a huge amount of money. That buying will push stocks higher. When we consider the oversold nature of the market, it is trading at a level that is technically oversold to a substantial degree. That has traders anxious, I think, to push this thing higher as well. Dovish announcement from the Fed makes all that happen, and essentially we wake up afterwards and take a look at the landscape going forward. The U.S.-China trade issue, of course, weighs heavily on the global economy, as well as other unfortunate political developments. This morning's quote of the day that I posted a little earlier, I featured the FedEx CEO's commentary from last night, where he basically just says the global economy is beginning to wane and it's all about politics, not just in the US, and other places as well. I could not agree more. I also agree that if politicians begin looking out better for their own self-interest, let alone their constituents, this thing turns around and we do okay because the global economy is not yet in recessionary mode. Once we get there, they can try to politic their way out of it, but then we're in a recession, then we have to begin doing other things. I'll leave it there for now. It's going to be an interesting day, like I said, and I'll report back to you later. Take care. Bye-bye.